Imagine waking up one morning to find your entire life savings gone. That's exactly what happened to millions of Americans in 1929. One day, they were riding high on a booming stock market. The next, they were standing in food lines, wondering what went wrong. The stock market crash of 1929 didn't just wipe out money. It shattered the economy and triggered the Great Depression, one of the worst financial disasters in history. But how did it happen? Was it just bad luck? Or were there warning signs that everyone ignored? In this video, we'll break down the key reasons behind the crash, how panic spread like wildfire, and what the US did to recover. Stay with us, because the lessons from this disaster still impact our financial system today. Before we get started, don't forget to subscribe to our channel to enjoy more great US history content. Prior to the crash, the 1920s were booming. New inventions, new businesses, and new ways to make money had people feeling unstoppable. This era was called the Roaring Twenties, and for good reason. The economy was thriving. Factories produced cars, radios, and appliances like never before. People had jobs, and businesses were growing fast. The stock market was on fire. Everyone wanted in. Stocks kept going up, and many believed they would never fall. Borrowing money was easy. Banks let people buy stocks with loans, a practice called buying on margin. This meant you could invest with money you didn't actually have. Banks had little regulation. They gave out risky loans, hoping people would pay them back when stock prices kept rising. But here's the problem. This success was built on shaky ground. Too much borrowing, too much speculation, and almost no one was saving for a rainy day. So what happens when the market stops going up? Up next, we'll see how a small dip in the market triggered full-scale panic and led to one of the darkest days in financial history. By 1929, the stock market was like a ticking time bomb. Nobody knew when it would explode, but the warning signs were there. Stock prices had been rising too fast, and too many people were borrowing money to invest. Then came October 24th, 1929, Black Thursday. Early in the morning, stock prices started dropping fast. Investors panicked and rushed to sell. The more people sold, the worse it got. Prices kept crashing. Big banks tried to stop the panic by buying millions of dollars in stocks to stabilize the market. It worked for a few days. But then came October 29th, 1929, Black Tuesday. This time, nothing could stop the crash. Stock prices collapsed. People lost everything. Their life savings, their homes, their businesses, all wiped out in hours. Banks stopped lending money, and businesses started shutting down. Some people, in total despair, even took their own lives. The stock market had officially crashed. But the worst was yet to come. In the next section, we'll see how this financial disaster triggered a chain reaction that led to the Great Depression. The stock market crash didn't just affect investors. It rippled through the entire economy like falling dominoes. When the market collapsed, it triggered a chain reaction that led to the worst economic crisis in U.S. history, the Great Depression. So how did things go from bad to much, much worse? Banks started failing. People rushed to withdraw their money, but the banks didn't have enough cash. Businesses shut down. With no loans or investments, companies couldn't pay their workers. Unemployment skyrocketed. Millions lost their jobs overnight. By 1933, nearly 1 in 4 Americans was unemployed. Families lost their homes. Without jobs or savings, many were forced to live in shantytowns called Hoovervilles. Farmers suffered too. Crops were plentiful, but prices crashed. Farmers couldn't make money and lost their land. It wasn't just America. The whole world felt the impact. Global trade slowed down and economies everywhere started collapsing. For years, people struggled to survive. But eventually, the US found a way to recover. Up next, we'll explore how bold actions helped rebuild the economy and prevent another disaster like this from happening again. The 1929 stock market crash shook the world, but it didn't mean the end. Slowly, the US fought its way back. It took bold actions, new policies, and major changes to rebuild the economy and prevent future disasters. So, what did America do to recover? In 1933, President Franklin D. Roosevelt introduced a set of programs called the New Deal, which was a plan to rebuild the economy. The government created jobs programs to help unemployed Americans work on projects like building roads and bridges. Public works programs provided food and housing assistance to struggling families. It wasn't an instant fix, but it gave people hope and helped stabilize the economy. Next, the Glass-Steagall Act stopped risky banking. Before the crash, banks gambled with people's money by investing in risky stocks. The Glass-Steagall Act made it illegal for banks to do this, helping restore trust in the banking system. It also created the FDIC, Federal Deposit Insurance Corporation, which still protects people's savings today. Additionally, the Securities and Exchange Commission, SEC, was created to regulate the stock market. It made sure companies couldn't lie about their finances or manipulate stock prices. The SEC still exists today to prevent another financial disaster. The recovery wasn't fast. It took nearly a decade. The Great Depression finally ended when the U.S. entered World War II, which created jobs in factories and military production. But the lessons from the crash shaped our financial system forever. The stock market crash of 1929 wasn't just an accident. It was the result of too much risk, too little regulation, and blind optimism. The safeguards put in place after the crash, like banking laws, stock market rules, and government safety nets, still protect us today. But can another crash like 1929 happen again? While we have stronger protections, history has a way of repeating itself. That's why understanding the past is so important. So, what do you think? Could another stock market disaster happen in our lifetime? Let us know in the comments. And if you enjoyed this U.S. history deep dive, don't forget to like, share, and subscribe for more great history content. Thanks for watching, and we'll see you in the next one.